EDC of Purchase Rationale. The date today is 12th of April 2023. It's a Wednesday. The time is 1:11 p.m. Malaysian time. Purchase Rationale discusses both fundamental and technical reasons when considering a particular stock. Disclaimer first before I proceed that whatever I share here is purely information and education only. Should you take action to buy a particular stock as suggested, please first consult a financial planner or a licensed broker. The stock in focus today is one that I have revisited four times prior. This is the fifth time today that I'm looking into it, as the stock has what I call a continuing trend momentum. Since it's the fifth time, the last time that I looked at this stock was on the 23rd of February. That was the fourth time. And since this is the fifth time that I'm looking at it today, I will redo all over the fundamental and the technical side of it, looking at the sentiment as well. Okay, so on the fundamental side, the stock that we are going to do is Lagenda Property Berhad. Since it's the fifth time, we will just restudy and review the fundamental. As you can see, the operating yield is 18.28%. What it means is that if there exists a differential between the market price and the intrinsic value, Lagenda Property, given its current operation, should be able to cover any differential that exists between the market price and the intrinsic value, with an operating yield in excess of 18%. If we look at the magic formula side, that is the operating earning yield plus the ROIC percentage. If you add up both, it should yield about a 33 to 34%. So that exceeds the magic formula. Normally, anything in excess of 15%, it passes the magic formula mark, and with 33%, it more than exceeds the expectation. Okay, it has a very reasonable enterprise value to EBITDA ratio. Normally, I'll call this the acquirer's multiple of only 4.66%. What it means is that the valuation for Lagenda is still very acceptable. All right. So what I can say that against the value as compared to the market price, it is still considered very reasonably cheap. Okay, it has a PAC ratio of negative 0.05, so there is some hidden latent value on the growth side, meaning there is a lot of forward growth in the this particular stock. Okay, so going forward, you can expect more growth from Agenda. Uh, it yields a handsome dividend yield of 5.46%, a positive cash flow of about 61 million. Okay. Okay, the Poitrovsky F score may be low now because it is what we call a stock in recovery. Given the circumstance in the last 3 years, Lagenda has not been delivering as expected. But if we check in the next few quarters, if the Poitrovsky F score moves up to 6 or 7, then we know that Lagenda is actually in the right direction. Okay, it has a healthy Altman Z score of 3.57. Anything between Anything above 2.5 is acceptable. So we can say that Altman will not face any bankruptcy issue in the next coming 2 years. Market cap quite big at above 1.1 billion. All right. Current ratio 3.23. So anything above 1.2 is already a good figure, but with 3.23, it means that it has enough cash to sustain itself going forward, right? It has a net debt of minus 52 million, right? Meaning that the Lagenda is actually a net cash company. So for future expansion and for capex expenditure, Lagenda has no problem to meet future requirements. Okay. Net debt to EBITDA is negative 0.21, so there is no issue with the current cash position. They are able to service whatever that. In this case, there is no debt to be serviced. Okay, since it's a negative figure, and it has a good, healthy retained earning. Okay, of 691 million. I would say that Lagenda is what I call a good fundamentally strong stock with future to look forward to in terms of growth and in terms of expansion. It has the cash to do more projects in times to come. How about the sentiment going forward? Let's take a look at the chart. Okay. Now, of course, definitely Lagenda has already a trend forming with many higher lows already pre-formed, and momentum wise, it is already above the MA 233 line, and currently it does what I call a squeeze breakout. Okay, so you can see that uh, given given the resistance line at apex 1, now at this present state, current today's date, it has already broken up against the resistance line, and it has now become a support. So it's a resistance turning to a support with a squeeze breakout entry strategy. Okay, if you enter at the closing price at 12:30 just now at 129, hold on. At yeah, 129, no, 129. All right. With a target price at impulse wave 3 at $1.60, with a stop loss at one 121. Okay, let's shift down a little bit to just below the cloud at 120. All right, you will still have a reward to risk ratio of 3.4 times. That's quite a handsome uh, reward. Okay, so and as you can see, the current volume is also beginning. You can see more green bars coming up. As of yesterday, there was a long green bar. Today, not yet. Still, what I call not a bias intact situation, but volume is already building up. Okay, so basically, I think there is good potential for Lagenda, even though property may be a little bit slow for the current moment. But given the chart and the fundamental, I think given time, Lagenda will probably do pretty well. Okay. If you think the trading idea shared is informational and educational, please like, share, and subscribe. And remember to click on the bell icon to receive future notification automatically whenever I make a new video of such nature. Should you have a question in anything regards to what you cannot understand about what I've discussed here, kindly post a question in the comment section below, and I will explain the meaning of what you have asked. Okay, thank you for listening and your time. Have a good day and bye bye.